welcome to today's BBC Money Programme news segment. Now, we all remember Enron, Tyco, Lehman Brothers, and all these other companies as companies that provoked America's outrage. But before these scandals had hit, America's largest trash hauler, Waste Management, was involved in a massive accounting fraud. The scheme was unraveled in mid-1997 when the new CEO was appointed for Waste Management. The U.S. Securities and Exchange Commission filed a complaint on March 26, 2002, charging the founder of the company and former 5 directors who were also involved with committing a massive financial fraud. The punishment for these defendants was that they had to give up all the profits they had earned from their unethical and illegal acts. They also imposed financial penalties on these defendants, and they were banned from serving as directors or officers of public companies in the future. SEC's reaction was, for years, these defendants had cooked the books, enriched themselves, preserved their jobs, and duped unsuspecting shareholders. To shed the light on exactly what had happened and to know more about the corporate governance failure, now we will cross over to our correspondent Gurdeep Singh, who will shed the light on what had happened.
Thanks, Aisha. Now, anybody who's well versed in the world of business will know that a number of different accounting scandals have hit America in the last 2 decades. One of the biggest scandals is the scandal to involve Waste Management in the 1990s. This scandal involved around 6 senior executives overstating the yearly profits of the company by about 1.4 billion between the years 1992 and 1996. If we look into the specifics of the scandal, the overstatement was mainly generated by the understatement of depreciation in the yearly accounts. So what the senior executives would do is they would see that the depreciation expense in the yearly accounts was too high, and they would try to lower it as best as they could by playing around with the economic lives of assets, playing around with the disposal values of assets. Now, looking from the outside, that manipulation might seem a bit amateur, because obviously anybody, any business, small, medium, large, can play around with their depreciation and overstate their earnings as much as they like. But thankfully, accounting counters this manipulation by the role that auditors play in the finalised accounts. So what auditors will do is they will receive a provisional set of accounts created by a company and check for mistakes, check for errors, check for accounting rules and regulations that be followed, check that the accounts show a true and fair value of the company. Now, at the time, Waste Management appointed Arthur Andersen LLP, who is one of the big 5 auditors, to check their accounts for mistakes to make sure that the accounts were accurate. Now, Andersen went against his role as an auditor by finding the errors, but then complying with the executives to hide the manipulations that were made on a year-by-year basis. One of the most infamous phrases at the time was the 32 must-do steps guide that Andersen created. Basically, Andersen provided 32 steps that he suggested senior executives should follow to cover their tracks, to make sure that nobody finds out that they had overstated the earnings of the company over the period. One potential motive for why executives might have been involved in overstating their earnings was, if you look into their contracts, they did have share options in their contracts. So for any of you who don't know that, know what that means anyway, share options means that an employee is not paid through physical money. He has shares put into his earnings which he can sell at a later date for a profit. Now, logic assumes that the higher the share price is, the more profit you'll get out of selling your shares, and the best way of increasing a share price is to beat expectations for profits, ensure that profit grows steadily, ensure that profit beats expectations of shareholders. From a senior executive point of view, what they might have thought was, if we're going to sell our shares at a high profit, we need to somehow make sure our profit as a company is strong, is growing, is higher than what people think it should be, and that the company has extreme value. So by understating the depreciation, overstating the profits, that motive of making sure that a high profit is gained from selling shares might have been achieved. Now, what I've explained involves the financial aspects of the scandal, but as similar with Enron and other WorldCom as well, other scandals at the time, the role of corporate governance structures played a massive role, a very, very massive role in the scandal that occurred at Waste Management. And if I hand back to you, Aisha, I'm sure you've got guests following that will go a bit more into the corporate governance structures and what role they played in the scandal.
Thank you, Gurdeep, for that detailed summary. Now we will cross over to a previous shareholder of Waste Management to hear his thoughts on the scandal.
As a shareholder, I'm very angry and disappointed about what the company has done. Waste management shareholders, other than the defendants who sold the company stock and thus avoided losses, lost over $6 billion in the market value of their investment when the share price decreased by more than 33%. I think as a shareholders, we need a fair and true view to make decision, and it is a cheat. It cheated all other shareholders outside the company, and it is completely unethical, immoral, and unfair.
Thank you, Eric, for sharing your thoughts with us. Now, a lot of people might ask, how was it possible for the managers of Waste Management to overstate the profit year after year without being caught? What could have been done to prevent this, and what can be done to prevent this from happening in the future? To answer these questions, we will now hear from our financial analyst, Henry Furman.
The fraud ran for multiple years because Arthur Andersen failed to do their job properly as an auditor. This therefore meant that the foundations of the fraud were in the audit. An example of a tool used by Arthur Andersen was proposed adjusted journal entries, and this helped them overstate earnings and understate expenses. As a consequence, Arthur Andersen incurred a $7 million fine by the SEC. This was the largest fine given to one of the big five firms by the SEC. In addition to this, all the auditors involved were relieved of their jobs, and they were denied any involvement in accounting practices in future, on top of fines given to them individually. How could this have been prevented? There is now an increasing awareness and requirement for the detail and direction of accounting policies and changes undertaken. If this was the case in the 90s, the waste management scandal would have been discovered earlier or even prevented as a whole. Examples of transactions that would have been highlighted was improper use of shareholders' funds and overstated land valuations. Changes in ethics with waste management. There are now new directors. This is a key point, as the old directors were the initiators of the fraud, and with them out the picture, the company can focus on regaining strength. The company enforced ethics onto employees through training and services. An example of a service is that there is an anonymous 24-hour phone line that employees can report suspected unethical activity. Waste Management is now regarded in the top 5 most ethical companies in the world. Back to you, Aisha.
Thank you very much for that, Henry. Now, unlike Enron and Lehman Brothers, Waste Management is unique in the sense that it is still operating as a company. To know more about how the company survived the scandal, we will now hear from our correspondent, Yu Wang.
After serious governance failures, Waste Management needed a powerful revolution. To make itself a brilliant future, Myers took over Waste Management as the chairman and president in November 1999 and rebuilt the company. Firstly, he emphasized the efficiency, productivity, and the operational excellence improvement. The company input around $200 million into the information technology system and created a brand new IT infrastructure and 40 individual software packages with definite applications for company tools and people. Secondly, for people management, performance management, companies concentrated on incentive compensation and corporate culture changes. Thirdly, for finance, a free cash flow was used to purchase the common stock. Besides these 3 main points, the total revenue of Waste Management has reached an impressive point. The company debt was diminished to $8.3 billion, and the company shares has risen by 85% since the low point in March 2000. Hopefully, this improvement will rebuild the shareholders' trust once again.
Thank you for that useful update. This brings us to the end of our news segment today. We hope you enjoyed the show, and we will see you next week in another BBC Money Programme news segment.